The price action on Aussie dollar has just been incredible. Already from last week, we had the RBA cut last Tuesday. The indication was no real kind of guidance in regards to dovishness. We rallied quite strongly after that. If you're out here in the Asia Pacific, you could have picked up Aussie dollar even south of 75 cents. 74.91 was the low. We actually closed above 76.36 that actual Tuesday, and we had poor retail sales last Wednesday. It still traded quite robustly, and even post a very, very strong U.S. non-farm payroll beat on Friday, 255 versus 180 was expected. Aussie obviously immediately sold off as we had this big dollar buying and spike, but it quickly recovered after that, and I actually think over the next kind of few days to weeks that you could actually see a really big move up in the Aussie dollar, going from these kind of 76 levels where we kind of are in this Asia Pacific morning, easily into 77, 78, and potentially trying to make new near-term kind of highs. At the end of the day, it's a relative value game from a yield perspective, and the Aussie dollar is going to reign that much more kind of supreme. It's also worth bearing in mind that we do have the RB and NZ on Thursday, so Aussie Kiwi longs are particularly kind of interesting just because anything with a Kiwi cross at least should have kind of structural headwinds going into this RBNZ rate decision where the market's pricing in 100% probability of at least a 25 basis point cut. And we know the RBNZ has been getting a lot more kind of frustrated. I'm personally very surprised that they didn't cut the previous two times, and maybe we're kind of getting the pressure from all of that. So not only could them cutting be interesting, but the potential language that they could be using from a dovish perspective could be also worth watching for that kind of very early Thursday morning Asia Pacific time, very late Wednesday night, European and of course North America, South America time. Watch out for that. Watch out for the Aussie. I think we'll move on to higher highs there. And I think if you had to pick kind of stop levels, you probably want to be doing it around 74.90, which is below, slightly below the low that we did post RBA cut. Or if you want to be a little bit more aggressive, then maybe about kind of the 75.40, 75 kind of 50 kind of level. And I would target 77 at least from the minimum perspective, and then maybe step it up every 50 cents to one figure, or just have kind of trailing stops moving up.